Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast. We are here today to do a recap of CCMP, a stock Ben and I actually previewed a couple of days ago right before the earnings, so now we're going to recap the earnings. Ben, how you doing?
I'm doing really well actually. I was kind of nervous after that, right before they reported.
Yeah, we kind of hyped it up a little bit. It is full disclosure. It's a position we own. It's a position we still own. It's a position I think at least right now we're pretty glad we owned. Released earnings yesterday morning. You and I were on the way back from Chicago. We were sitting not even at the airport yet. On the way to the airport, we saw they got a beat, got a little bit of an uptick.
Yep.
And then the stock just kind of slowly marched forward. Kind of odd. I think maybe that happens more with less followed companies, perhaps. You didn't have that instant pop, but all in all, closed the day up more than 7%. So that's good news.
It's very good news. Yeah. One of the things that's interesting and almost vindicating for what we do and kind of a more active approach that we take versus the passive. Everyone's talking about this passive investing now. There's a huge debate on Twitter and everywhere about it. So it's nice to have a little bit of vindication that, you know, when you do research and actually look at companies and read the reports, as Jim Grant was saying on Wednesday, that there is some reward to that.
Yeah, absolutely. That's, if you're just tuning in or you don't follow much or you see us on Seeking Alpha or whatever, Tusk Media that runs the Investing Podcast, we're owned completely by Narwhal Capital Management. We're an RIA. We do kind of traditional bottom-up valuation. We look for opportunities. We look for undervalued and underappreciated stocks, and CCMP was certainly one that seemed like that type of story. And so at least in the short term, we don't want to take a full victory lap, but we're certainly pleased that what we were hoping would happen based on some trends and based on some earnings projections. We're pleased that we were able to kind of get there. So I want to jump in a little bit more, do some analysis on the reports themselves in terms of what we've learned. And start off, I think the best place to start is really looking at some specific segments of the slurry business, which if you don't know what slurry is, it's a real word. We're not just making it up. But you can go back and watch the video, but in essence, it's kind of almost a layer of coating that goes onto the chip to kind of smooth things out.
Right.
That's the real oversimplified portion of that. And CCMP is a dominant player in the slurry space. 40% of market share, thereabouts, potentially more, I don't know.
Right.
But they really do slurry in three different types of ways. You've got tungsten, you've got dielectric, and then you have
just everything.
Kind of everything else.
With it, copper and other things like that. So that was one of the real things that attracted to CCMP was the fact that it does have the dominant market share in a product that is a relatively small portion of as a portion of a company's chip cost to manufacture a chip.
Right. So imagine just using random whole numbers. We're not talking about, this is 80 cents of the dollar being spent on the chip. We're talking about probably fractions of a penny.
Right. It's like if you're going to Walmart versus Whole Foods to buy a product, and you go to and you're making a decision to buy a hot dog.
Right.
Like you're not gonna choose one of those places based on the price of the hot dog.
Yeah.
Because that's an extremely small portion of the
what
entire
you're actually
basket.
purchasing. Right. That's a great example.
So dielectric slurries has been an issue for CCMP. They fell behind a bit in some of their progress in that over the last couple of years, but that business was extremely strong. It was up over 20% on a year-over-year basis this quarter. Extreme acceleration this quarter versus the balance of the year. So when you're talking about a business that's grown in the double digits on a year-over-year basis in a quarter versus single digits for the entire year, you can do the math and it's showing that good acceleration.
So what, and putting you on the spot here, what do you think contributed most to that dielectric side?
I think a lot of it, they will, a lot of times it's tempting for management to kind of take credit for it. A lot of it has to do with just the end market in general. But I also think that the new CEO, David Lee, he has been doing some things on that side to really improve the business, and he's been working with customers a lot. He spends a lot of time in China. You talk to the investor relations representatives, and so he's back in China.
Yeah.
And so it's good to know, like, he's very much in constant conversation with customers. There's really a relationship there, and it's difficult to quantify, but it does show itself and demonstrate itself to have value when you're looking at the gross margin and looking at 50% gross margin.
Right. Yeah, and when we start looking at the things that really drove this story, especially for the quarter, and also as we start to look forward, because this was we mentioned at the beginning of this, we're kind of traditional. We want to find some value.
Yeah.
This was not necessarily an opportunistic short-term trade for us.
Right.
This was something that we saw maybe more as a secular trend and something that was generally underfollowed, underappreciated. But talk a little bit about demand and what we're kind of continuing to see there.
Right. Well, I mean, chip growth, as you're seeing in Intel report and on Semi and Lam Research, I mean, everyone's reporting that finally inventory has basically corrected in the chip space. And for that reason, now all of a sudden you're seeing the end demand pull through of that. There was massive inventory build, and now inventories are relatively normal levels. And CCMP also, in their conference call, saying that this is a meaningful improvement for them and from their business and from a chip production perspective, because semiconductor wafer starts have historically, and I haven't done the math to adjust for this quarter, but historically had a 0.88 correlation with CCMP's revenue. So if you can figure out what semiconductor wafer starts are, and there's a multitude of sources that you can use to do that. I use semiconductorassociation.org. You figure that out, and then you have a pretty good handle on whereabouts you can expect revenue for CCMP, at least on a trajectory basis.
Right, and it seems like in that regard, this is a long cycle.
Right.
Pretty long cycle. We had huge issues in terms of actual supply of chips, and that's why you saw all these companies from Intel to Micron to you name it, just really get beat up over the last couple of years. So we don't think this is a single quarter rebound. We are seeing rebound. We're seeing strong rebounds in some cases. Even just as an example, Micron the stock's almost doubled over the last couple months, but nowhere near where it was a couple years ago.
Exactly.
So we're starting to, maybe we've seen the bottom there, and if we have, that would certainly be great news for CCMP as it continues to rally. And that correlation is going to be a real factor, certainly to their favor. The other thing, margins.
Right. Yeah, that's something I really wanted to touch on, and I do want to address this with the management team, is, if we are seeing this revenue acceleration, which I expect, the issue will be, from my perspective, I want to see a lot of gross margin leverage. I want to see leverage over fixed costs. I don't want to see CapEx expanding rapidly. I want to see a lot of that on an incremental basis drop to the bottom line, because I think that's a way that we can differentiate our thesis from the streets. The problem is the gross margin isn't leveraging as much as I thought it would. Going forward, they expect 48 to 50% GAAP gross margins for fiscal 17, which will end next September. That's not really much of an expansion versus this year. On a non-GAAP basis, which strips out the amortization of an acquisition that they had, it's about 49 to 51%. They didn't say that explicitly, but they did refer to it and kind of allude to that kind of guidance. So I would have liked to see another point or so in margin expansion. I'm hoping that they're being conservative and that they will realize that. I also want to see some moderation on the operating expense side. They're saying about 3% inflation for next year. I think some of that might be to incentive compensation. I want to get some more clarity about that. But basically what I want to see is that the incremental earnings and the incremental revenue flow through to the stockholders, the owners of the company, rather than the management of the company, because sometimes there's an agency problem that exists there.
And presumably, if all these factors add up the way you would almost expect them to, huge market share, great product, increase in demand, you should see that efficiency trickle down in terms of the scalability, as long as there's not some of that dead weight loss going and staying inside internally and going to management compensation and other things that are maybe not reaching shareholder value.
Exactly. And when you have that scale, there should just generally the greater economy to that scale. So look for that in the coming few quarters.
Very good, very good. So that's the CCMP recap. We're still holding it.
Yep.
We're going to keep riding this thing out. We'll continue to keep an eye on it and probably update you throughout the quarters, maybe as we see other earnings reports that might be read-throughs down the line.
Indeed.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.